Ray, tell us the name of your new book that's coming out soon.
The new book coming out is titled The Ultimate Book on Stock Market Timing, Volume 5, Price Objectives and Technical Analysis. And it's the 5th book of a series that started in 1997, and when it's all taken into account, it covers 1,600 pages. So it's a 14-year project. It's an epic in my life to have written this book, and now it's finally completed. And this last book is the missing link.
And tell us why this book differs from the other 4.
Well, the first 4 dealt with the subject of market timing. You know, people in the market believe that timing is everything. But in reality, it's almost everything. Because not only do you need to know the right time, but you got to get the right price. For instance, today we have so much volatility in the market that the Dow Jones, in many cases, trades 200-300 points in a day, and that can make a quite considerable amount of difference in your final profit margin. So this book is dealing with price. What is the price where there's likely to be support? What is the price where there's likely to be resistance and I can't get any higher? But even within this book, I show you how to combine the timing methods of the first 4 volumes with the price objective theories of this one to enhance your probability of being successful by buying at the right time and the right price.
And what level of investor would be able to benefit from this book?
Well, all levels could benefit from this book. For instance, if you're a long-term investor, one especially interesting part of this book points out that every time the Dow Jones U.S. stock market has dropped around 50%, had you invested at that time, you would have always made your money back within 5 years. In fact, in almost all cases, maybe there's only one case where it didn't happen, you would have made 50% return within 5 years if you bought at the 50% correction. In many cases, even more than that. You know, take for instance the last high we had, which was in October of 2007. The Dow was 14,198. Well, when it dropped 50%, which is 7,099 in February of 2009, if you would have bought at that point, within 14 months later, you're already 58% above that point. If you waited 2 years, you're over 80% above it. And this is typical whenever the market drops around 48, 50%. You can buy and expect within 5 years, if not even 2 years, of making 50% on your investment. Now let's take, for instance, somebody who's more of an intermediate term investor who wants to invest just on what we call the 4-year cycle, the presidential year cycle. Well, in 85% of the cases historically, the market has dropped over 20% from the high. And it's always happening between, in the middle of the president's term. So there's another thing a trader can use or an investor can use. Whenever the market drops at least 20% from its previous high into the middle of a presidential term, that's a good time to buy in most cases. But we also have very sophisticated short-term traders. Somebody who applies the creed, I want minimal market exposure and maximum profit potential. In as short amount of time as possible, I want to make a profit, 4 or 5% profit, which of course in commodities can translate to 50 to 100% of your margin requirement. This book addresses that too.
So it sounds like an overall book that anyone can find beneficial.
Anyone can find benefit from this book. I will say this, if you're a numbers person, if you like to count, you're going to be extremely satisfied with this book. But even if you don't want to do a lot of mathematical calculations, it still has value. Toward the end of the book, I'm especially proud of the work I did because it deals with aggressive short-term traders, those who like to be in market only 1 to 4 days. But, when do you trade? When do you look for that 1 to 4 day move? What price do you buy it at? Well, this book goes into the methods I use for market timing, and it goes into the different calculations I use for determining what to look for in a 1 to 4 day trade.
Excellent. We really look forward to the release of the book.
Thank you.